All right, we're back. Forex market portfolio breakdown. That's what this video is all about. It is Friday morning, so just before the weekend kicks in, guys, I want to talk about, I want to break down our portfolio. We got 3 positions in place right now, and this one, pound versus the US dollar, is the latest edition. We probably late for the party with this one. Nevertheless, there's still more than halfway to go, which is why we decided to jump in. And I'm fully aware that we might have a backlash to this drop we've had, this week. So maybe a technical correction, some local technical correction is definitely possible. I get that. And by the way, if we're gonna have that type of technical correction, I'm actually gonna try double and maybe even triple up. In this case, triple down. Once price action goes up and potentially even test 28.81. That's the big level it broke, right? You can see how pricing had 2 failed attempts last week and the week before, but this time crushing it. But again, it might come back to retest, so if it does, that's where we're going to drop the hammer. All right, if everything goes well, we just keep working our way up as far as the position size goes, all the way to 22.97.6. Definitely can be easily can be rounded up to 123. And again, that's still a big way, a big move ahead of us, right? So that's the pound dollar. You all know about all about the dollar Swiss franc, because I've been talking about this for a while now, right? Here we started off. Actually, we started off when price action spiked twice from above, right? 86.72. That was the big one for us. That was the big sign that something was up. And then, of course, breaking above 87.14. That's all we needed. And you can see where we pulled the trigger the first time, right there and then. Then the big breakout. This weekly session was explosive. And it smashed 88.22. And again, this is, today's the last day. We're going to have a weekly close by the end of the day. Anything can happen. It could drop, leave a nasty spike, slicing across that 88.22. That's definitely not a good sign. We're going to have to run for the exit. But if not, if it's going to close roughly where it is, or at least, above 8, it's important that it's going to be above 88.22. It's going to give us that weekly close confirmation that we're probably on the right track. And we'll come back to this, early next week to continue this bullish campaign. We're targeting 90.80. Looking at this from the monthly perspective, you can see why. Monthly perspective represents the long-term cycle. Ever since July 2023, price action has been trading sideways. Right? Ever since July. That's a long time. Almost a year and a half. Back and forth. And it's just coming off the bottom. And it's making its way towards the top section, starting with 90.80. That's why we're focusing on that level as a target. But it's getting closer. It's definitely closing in on target here on that other side of the range. But again, it has to break through 88.22. Seems to be doing that right now as we speak. But again, not 100% final yet. But it's coming. Last position for us, that's the third one, is Aussie Swiss franc. We saw the close last week was such an amazing, technically speaking, was an incredible close because it dropped all the way, left that nasty spike right across that 57.64 level. And essentially, we already know that it didn't really solidify a touchdown when it was on the downside, right? It was supposed to reach the lower section. 56.53, it had to make contact, but it didn't. It got really, really close, but it missed it by a fraction of a point. And for me, that means it didn't really visit in that section, which means the upside push was nothing but a technical correction. The price is more than likely to come back and finish up the job, solidify a touchdown at 56.53, and even penetrate right into that lower section, potentially even taking the previous low. That's what I see here with the Aussie Swiss franc, and that's what I was conveying with my analysis. So yeah, we got in pretty strong right off the bat. We fired off 1, 2, 3, and price action is coming off. So right now it looks pretty good to me, but again, early stages of the situation. I would expect price action to accelerate this downside momentum all the way to the target in the next couple of weeks. That's pretty much it. 3 positions in place. I do look at the silver as the next candidate. I feel like this one is pulling back for a reason. It wants to come back into their blue system, into the blue range here, because the breakdown was not real. It's a fake one. It's noise. We're looking at a noise right now. So I think price is going to settle down right above 30.50 by the end of the day today. So on the weekly close, it will stay inside. That's going to be a huge sign of a potential upside reversal, at least on a short-term perspective. So we're going to be chasing 31.82 for a quick one, and we're going to try to get to be aggressive with that move, since it is a short-term type of situation, right? But 31.57 and 31.82 are going to be our main targets to work on. So get ready for this one. The minute it starts to cross over 30.50, we might not even wait for a daily close confirmation, just fire off a trade. Then wait for the close, and then come back next week, that is, with a lot more power to this position. We'll pack a bigger punch. Alright guys, that's about that. Forex market portfolio breakdown. Hope you enjoyed it. We're going to see you next video. Take care. Cheers.